Hello and welcome in, everybody. It's Tuesday, January 31st, and GM has just released their quarterly earnings. And what I like to do on this channel is to go through the earnings report and compare it to how the media is actually interpreting GM's earnings. I don't know, man. I think the media has it wrong again, but I'll let you be the judge. And I'm going to try not to edit anything on this video. I'm trying out a new way of doing video. So here we go. Without further ado, magic. Headline from CNBC, GM smashes expectations and guides towards a strong 2023 despite margin squeeze. Some of the highlights here, I use my mouse as a pointer. Hopefully you can see it. General Motors fourth quarter results easily topped a year earlier. GM guided towards 2023 results above what Wall Street was expecting. And the results come in as the U.S. automotive industry is beginning to normalize after several years of record low inventory. So the message from the media is that, GM has really released great earnings, and they think that GM is going to perform very, very well into the coming year based on what GM is saying. And so what did the stock market do? Of course, stock market's like, great, up almost 8% as of the date of this recording, roughly about half an hour ago, I took the snapshot. Up 8%, roughly 39.17 a share for shares of GM. Now, what I want to do is I want to take the earnings deck from GM and walk through, okay, so why did the finance media think this report was that good? This is how GM opened up their deck. Q4 2022 earnings, strong performance drives our transformation, which is corporate speak for we're good at what we do and just we're good. Trust us. We're good. Shout out, Mary Barra. So here are some of the highlights that GM dropped that describes that strong performance according to their words. So what they said is U.S. market leader, number one in total sales, full-size pickup trucks, full-size luxury SUVs, and luxury sports cars. So in their heads, in the U.S., they're the best. Record Chevy Bolt EV and Bolt EUV deliveries, best-selling mainstream EV series. The mainstream verbiage is interesting, which is what they're calling a very cheap EV, I guess, in their standpoint. And second half of 2022, the Bolt sold about 100,000 units in all of 2022. They opened some battery plants. Their market share increased. And I want to come back to this in a few seconds here. Cruise became the first and only paid driverless ride-hail service. Congratulations. In San Francisco, even though there were a couple of news reports of them just kind of stopping in the middle of nowhere, and I'm sure you saw that. Secured all EV raw materials for 1 million units of North American capacity by 2025. And this one's actually pretty interesting because they're claiming 1 million units in North America by 2025. But Tesla's going to be probably close to 4 to 5 million delivered around that time, just to compare GM as an EV company to a company like Tesla that's a pure EV company in the United States. But let me come back to this market share increase number here. So GM highlights total United States increased market share. So if you look at the total year ended for 2022 versus 2021, they went from 14.4% in 21 to 16% in 22. But if you look at their total worldwide market share in a shrinking total market share, a total auto market globally, they've actually stayed pretty much flat. And that's due to the fact that regions like in Asia Pacific, Middle East, and Africa, they've actually lost quite a bit of market share. So if you look at it from a total perspective, not just in the US, GM has the same market share globally year over year, while the total sales of cars in the world have come down year over year. So they're selling net less cars, and I'll show you this later in the earnings deck. So that was interesting verbiage on the highlights there. So they're not really painting the full picture, which is fine. That's what corporations do. For their guidelines for 2023, they think they're going to do really well because the U.S. vehicle SAAR, and SAAR stands for seasonally adjusted annualized rate, which basically is, fancy speak for how many cars are going to be sold in a year. They think the total U.S. market is 15 million. And so they are projecting that they're going to do that well based on projections of the auto market doing well. So it's not based on their own trends. It's based on what other people are saying the auto market's going to do. So just keep that in the back of your head as we go through the earnings. All right, now let's go ahead and look at the financials. I said I wasn't going to edit, but I found something else while I was going through this deck. GM makes it hard to know exactly what's going on with some of this stuff, but I really want to bring your attention to this. This is North America performance from a revenue perspective and wholesale units. So Q4 right here that I have highlighted, this is $35.5 billion in net revenue that they did in the North America region, which is basically America, Canada, Mexico. And wholesale units were 787,000 for the entire region. And you can compare that to the Q3 numbers. It's basically flat. And Q4 is historically by far the best quarter for auto sales especially in North America. You know, all these Christmas deals, all these commercials you see all the time, right? So they're flat quarter over quarter. But the bigger story is that you can see here, US dealer inventories have increased in the US from 359 to 411. So let me put some numbers together for you to help you understand exactly what's going on. I've taken that revenue number and I've actually taken the deliveries that were just in the US from the earnings deck, which have the link for that in the description below. And this is for US only to try and get some sort of average selling price roughly to understand how much more inventory these dealerships are carrying and how much GM is offloading to the dealerships. So they've gone from 34 to 35 billion in revenue. Their deliveries in the US only specifically has gone up from 556 to 623,000, but dealer inventory is also up from 359 to 411,000. So they delivered 67 additional units in the quarter, but 52,000 of them essentially went to dealers. They didn't exit the dealerships. They didn't go to a consumer. They just ended up in dealer lots. And the ASP, directionally speaking, not directly, but directionally, is down about 8%. All right. So here's some very quick math. If you take, I shouldn't have done that, but here it is. Here's some quick math. If you take the ASP and you basically times it by the gap in inventory, there's $3 billion of unsold revenue that is sitting in dealer lots that GM claims as growth, but in reality, they just moved the inventory from their factories to dealerships. If you accounted for this as actual net sales to their consumers, Q4 revenue would actually be down 4% versus Q3. And Q4 is by far the best quarter for automakers in a typical year. So this means that GM has shrunk. Their net sales out to the consumer has shrunk, especially in the United States, by 4% in a historically super strong quarter. So what does that imply for 2023? I'll let you be the judge. This lines up with car dealerships, guys, tracking of supply and inventories at dealerships. I've highlighted the GM brands, Chevy, GMC, Cadillac, and Buick. This line here means healthy supply, which is 60 days on hand of supply. Chevy is right at that healthy level at the end of 2022. It doesn't even include December and the last month as well of super slow sales. So these are probably blown out quite a bit. GMC and Cadillac were already over healthy supply, and Buick is gone. This is called channel stuffing. If you're not familiar with this term, it basically means that automakers are moving inventory from their factories to the channel, in this case, dealerships, and dealerships are being basically stuck with additional inventory, and GM can claim it as a sale because they've sold it to a dealership, but they're not actually leaving the dealerships. They're sitting on dealership lots. And I recommend just literally type US dealership sales, US, and then you'll see a host of channels talking about how big of a disaster it is right now in the United States from a car selling perspective, both used and new cars. Another warning sign that I'm seeing in the GM earnings after the very rosy language and CNBC apparently loving their earnings in the stock market. Net income. So how much money the company actually has made. Net. 2021, GM made about 10 billion, 2022, 9.9 billion. So they're actually down, right? Their net income is down 1% year over year, roughly. So they're not making more money, they're making less money from their net income perspective. They do a bunch of other accounting magic down here, you know, income tax expense, interest expense, and then they have these line items for Cruise and Russia exit and Buick dealership strategy. Sure, these are all valid things, but net income, how much money the company naturally makes, is down in 2022 versus 2021, down 1%. Then, if we look at their total deliveries, GM's total deliveries from 2021 to 2022, full year. 2021, worldwide, they shipped roughly 6.3 million cars. In 2022, they shipped roughly 5.9 million cars. All right? GM's deliveries are down 6% year over year globally. They're not up, they're down. And here's a point I really want to make super clear. 2021, supply chain challenges, valid. COVID, valid. People, I don't know, just staying home. They're afraid to go buy a car. Sure. Inflation, great. 2022, we've had deflation. Supply chain challenges went away. COVID went away. Okay. But we have higher interest rates. Yet, they sold less cars in 2022 versus 2021. What is going on? Okay. Let's look at another chart here. This is North American capacity two-shift utilization. Basically means what percentage of the workforce that GM has hired is actively working based on the capacities that they've built in 2022 versus 2021. In 2021, about 80% of their shifts were fully utilized, meaning that they had all the people working at those shifts. They had, again, supply chain challenges, COVID, et cetera, factory shutdowns. In 2022, it's basically almost at 100%. So everybody's working. But they have less deliveries and more people working. So what's going on there, right? And you'll see these numbers at the end, how this kind of all coincides and why the story that mainstream media is telling about this is just I'm just so confused. It's like the stock market's bipolar. It really is. Another metric that is concerning to me. December ending period, December 31st, 2021, previous year. They ended cash in 2021 with $20 billion on hand. In 2022, they have less cash. They have about $1 billion less on hand. If you look at their accounts receivable, their GM financial receivables, which is basically the bank arm of GM, and their inventories, you see the 2021 numbers are about $7.4 billion in account and notes receivable, about $27 billion in GM financial receivables, and about $13 billion in inventory, basically cars waiting to be sold. Think about it that way. In 2022, all of these are up. So they have less cash and they have more receivables and inventory. So what's going on there? So cash is down 5% year over year. Does this seem like a company that's doing well? In a year, in 2022, that's supposed to be alleviated with supply chain challenges. What is going on? Their inventory and receivables are up 38% year over year. So their cash is tied up in receivables, which is basically them waiting to get money, and inventory. All right, everybody, now we're at the point where I made the mistake. So I want to show you where I messed up so that hopefully nobody else makes the same stupid mistake than I did. It doesn't really change the tone or the really overall trend of GM, but I really do want to highlight it because I think it's important to admit when you made a mistake. So nobody's perfect, and I sure as hell am not. So here's where I made the mistake. Down here, I had highlighted net cash provided by financing activities of negative 2.5 billion for automotive, negative 873 million for 2021. This is the 2022 number. In reality, this is completely incorrect because this is just cash flow from financing activities. It doesn't include operating activities or investing activities. That was a huge mistake. I read net and I'm like, oh, it's net of everything. And of course it's not, because I was rushing to put this specific thing together and I shouldn't have done that. So my apologies there. This also ties into the same exact slide where I highlighted GM financials, $4 billion. But again, it's just from financing activities. It's not really from operating activities or from investing activities or total. So this is where I made the mistake. I apologize to anybody who read that and ran with it. I'm really sorry. I did delete the previous video, and hopefully you watched this, and I also corrected some of the stuff I did on Twitter as well. What I was trying to get at, just so you guys understand, is that I'm trying to get to the net cash that's generated from the automotive business and GM Financial. And I was trying to do that by looking at their beginning and ending balance. And I read this as the ending, sort of the net change from beginning to ending balance. But in reality, it's the difference between these two. So even though automotive lost $1 billion in cash flow technically through this report, and GM Financial as well, about, call it $500 million. Really, that's not the best way to look at it. After speaking to some of my friends after they caught it, and some of the people that were like, you're an idiot, you freaking clown. Yeah, in this case, I was, sorry. Really, the best way to look at cash generated from the business is using just net cash provided by operating activities, which is the $19 billion number here. For automotive, you can see GM Financial generated $5.5 billion. So hopefully for those that watched the video before, the metrics that I had about how much cash GM lost, let me bring myself here to magic so it's a little bit easier for you to see me. The dollars I put for the per cash delivered where GM lost money technically is not the correct way of looking at it. In reality, if you just look at the operating activities, just like any other car company, you would see that GM is actually generating cash from the car business. Even when you total, investing activities and sort of financing activities as well. Technically, there's cash leaving the automotive side of the business, but generally speaking, you want to look at operating activities when you do that math. So that part of the business, or that part of the deck rather, that I presented, you can just throw out and replace it with this, where GM is actually generating cash from their car business. However, what we saw, what we've looked at so far through the video is legit, is valid. So continuing on that vein, one of the things I want to highlight here is that GM is indeed generating quite a bit of income from the GM financial perspective, which is part of the business that GM has, where they give loans and leases, as well as cars. If you look at 2021 versus 2022, they're definitely generating income from both the car and the GM financial business. But if you look at the GM financial business for GM in 2021, you can see that $5 billion is roughly 40% of the total income that GM made in 2021. And the $4 billion they made in 2022 is, again, 40 to 35% of the business. So a significant percentage of GM's business comes from this GM financial arm. And one of the conclusions I gave to after sort of going through the deck and my initial representation of what I put together was GM is a bank disguised as a car company. And I still hold true to that because there's a significant percentage of their business that's really coming from that GM financial arm. And if you look at their growth rate, which holds of 2022 versus 2021, they're actually coming down in a year where a lot of these supply chain challenges and COVID is no longer a concern. And the overall car market is shrinking while the EV business is booming, right? And so I'm going to hold by that statement. I really do think GM is a bank disguised as a car company. Yes, they make millions of cars, but a significant percentage of their profits is really coming from that. And I think executives are going to make a lot of decisions based on that classification, really. There go my dogs. And so if you're not familiar with GM Financial, this is what their page looks like. You go there, you can buy a lease or a loan through them. You can do business financing, resources, so on and so forth. It's an actual part of the GM brand. They have GM Financial. And a lot of people say, well, how come when you think about, you do videos on Tesla, how come you're not applying a PE ratio that's closer to GM? And I think the reason why is I believe, again, not investment advice. I'm literally a moron. You just saw me make a mistake, okay? But I really think the reason why the market is giving GM a price earnings ratio of 7 versus, say, a Tesla's, 30 some odd that it's at now, and tech companies higher, is because I think the investing community realizes that there's not a lot of growth in GM's business because the auto sector is not really what's driving the profitability, at least into the future. The market thinks it's probably something else, and that's why it has such a low multiple. So applying the same sort of thought process to Tesla, I don't think is correct. And the sort of verbiage I came up with was, are banks good at making EVs? So if a company's primarily, a lot of their income is coming from their financing arm, and the automotive sector potentially is going to be diminishing quite a bit, especially through some of the trends we saw appearing in 2022. Are they really set to make EVs, right? And so the ultimate question here, I think the proper conclusion to this video is, can GM grow the auto sector in 2023? That's really what it comes down to. And if we look at the fourth quarter earnings based on the results they just unveiled, it's clear that in Q4, which is, again, traditionally a quarter where legacy auto performs best, they've actually technically shrunk, especially when you're thinking about how many cars they sold to consumers through the dealership network. Their growth quarter over quarter, Q3 through to Q4, is almost flat. It's like, low single-digit percentage growth. And so with a dealership inventory that's ballooning, right? That's from most of the data sets that I'm seeing is above what's called a healthy supply. And then you're entering a Q1 in 2023 where you're going to have higher rates. People are buying less cars. People are buying less homes, right? The economy is generally slowing down quite a bit. There's all these talks about recession. What's going to happen to GM in Q1? And are they really set to grow in 2023 given all these trends that are happening? especially when there are analysts out there saying that the auto market in the US is going to grow to 15 million from the 13.9 in 2022. Is that trend actually going to take hold? And so that's where I get really concerned for GM. I don't see where this growth is going to come from. If it's coming from the gas cars, this means that the prices have plummeted and people are able to buy gas cars again, especially with higher rates and people tightening up. But ultimately, I think the biggest message here is that a car company in Q4 is actually not growing quarter over quarter. And that I don't think that spells a good outcome for this year. So I would love to hear your opinion on this. Again, if you watched this video before and you're watching it again based on the mistake I just made, I do apologize for that mistake, but I really do think the story still holds true. I think GM is in trouble. I don't think the media is really looking at this correctly. Yes, the stock could be up 8% because it's at a 6 or 7 PE. Sure, it might be undervalued from that perspective, but I really do think from a growth perspective and GM's prospects as a leading auto manufacturer is super dependent on them being able to manufacture EVs. And if their target from a sourcing perspective of products, of raw materials is 1 million by 2025, is that enough? Is that enough? And if most of the, say, auto segment is transitioning to EVs, how are they going to be able to make money on the rest of the fleet while the EV sector is growing disproportionately versus the gas sector, especially with the EV tax credit and all these things going on? What's going to happen there? So anyway, I hope you enjoyed this video. I'm not even going to plug anything because I messed up. So I really, really appreciate you watching this channel. Let me know in the comments what you think, if there's anything else I should be looking at. But I really do appreciate you guys sticking with me, and we'll see you in the next one. Take it easy, everybody. Bye-bye.